What's up? I'm Dan Fredenberg, and this is for FIGGERRIDOUT.com. I'm joined today with somebody who's got a pretty exciting background. This is part of the Dream Job series, which some of you, if you've been following it, you might find it a little bit incredulous at this point. But I've already interviewed some attorneys, and which I think it's kind of stretching it when you call that a dream job. And I don't mean to imply that attorneys have bad reputations for being morally bankrupt, but it's entirely possible that sometimes when they're crying themselves to sleep, they realize that at least they're not IRS agents.
Hi, this is for Dan Fredenberg. I've been watching your Figure It Out videos and I have a lot of questions. First of all, what kind of awful person defaces the angelic and serene Canadian accent on purpose? Do you think it's charming when you stop using the word a and learn to say about instead of a boot? And Canada is not a communist country. It's a beautiful land and you're a disgrace.
Michael, I'm sorry for being negative about it, but Michael, how do you pronounce your last name?
Last name is Vernon.
Raanan. Okay, great. And thank you for joining me. I'm really grateful for that because I think that you would have to have an inside look at something that everybody has to deal with, and that's pretty exciting. But let's start off. Do you want to introduce yourself a little bit?
Yeah, sure. So the name is Michael Vernon, founder of IRSvideos.com. Before I started that platform for back taxes, I was working 8 years in the belly of the beast, I like to call it, over at the most beloved agency in the world, which of course is the IRS. So I was there from 2004 to 2012, and then January 2012 left the service and started my own practice.
Excellent, excellent. So then I imagine that there are different departments for different types of activities. So I imagine there's IRS agents for private individuals just on their personal income tax and whatnot, and then there's others for corporate. Can you give a little detail on like how they're distributed, like the workforce is distributed within the IRS?
Yeah. Actually, objectively, the IRS agency is actually pretty interesting. There are a whole bunch of positions at the IRS that many of us don't even think about. There are biologists working there, economists. There are folks who don't touch, have absolutely nothing to do with tax returns at all. So a lot of folks know the IRS collectors who try to collect the back taxes and the missing tax returns. So that's what I did when I was there. And then, of course, you have the famed IRS auditors, which everyone loves to hate. And that's a certain percentage of the IRS, but a bulk of the IRS are just folks who are at the service centers handling paperwork. And then a whole bunch of other folks, all the way from criminal investigators to economists, like I mentioned, and just other folks whom you wouldn't even think are, part of the agency. So it's a very interesting agency. And then when I was there for 8 years, I was able to work across the agency with other counterparts and colleagues there. Some of the folks in the law enforcement side, some of the folks on the service centers, and other folks who works kind of with the Department of Defense and some other agencies as well.
Wow, that's really interesting. So one of my best friends, especially in real estate, she practices tax real estate law. She was a real estate attorney in Dallas, and then she got her LLM to be a tax lawyer. And she had some interesting information that she shared with me about how the IRS works. Now, I don't know if you're aware of this. I always tell people that I'm from the internet because I am. But right now I'm physically located in Canada, which is actually where I was born. So we have a different set of rules. So I'm not quite as worried about stepping on some toes right here. But one of the differences that I understand, and let me know if this is something that was in your purview as a collector, she said that the IRS can literally take the clothes off of your back if you are a bad player. And I think that is really the key thing. You don't want to get people all nervous about, literally being left on the street, due to the IRS. It seems like you have to be really belligerent before they pull that trigger. What's some answers or replies to that? What can you tell us?
Yeah, so there's some positions at the IRS that have a certain level of authority. For example, as a former revenue officer, which was my official title, so a title just the IRS collector, you can proceed through the collections case if a taxpayer's non-responsive or uncooperative. Uncooperative doesn't mean they disagree. You can disagree all you want with the IRS, but these are folks who are not responding. These are folks who are not submitting things even though they needed to submit just basic things. And if the taxpayer has assets and the taxpayer is not trying to work with the IRS to actually set up a payment plan or demonstrate that they're in a hardship or some sort of resolution. The IRS needs a resolution of some sort. It doesn't mean full payment. They just need to work with the other party, which is called the taxpayer. So when there's no communication there and cooperation, then the IRS, some of the employees have authority to issue a bank levy. So
Mhm.
go ahead and get into the bank account, take the money, go into the wages with the employer, take the money, accounts receivables, take the money, or what they call a levy. You could also go in and seize assets. A piece of real estate, any vehicles above and beyond just one or two vehicles for the primary taxpayer and the spouse. There are sometimes there are taxpayers with 10, 11, 12 luxury vehicles. When I was at the IRS, just by virtue of being in Los Angeles, California, I had taxpayers from A to Z. These are just regular John Doe folks, all the way up to well-known celebrities, rock bands, politicians, people you see at the Oscars presenting every year, stuff like that. You never know what kind of case you're going to get. And some of these folks they were uncooperative, they were not communicating, and they have plenty of assets to seize. But with that said, a vast majority of cases, 99.99%, never ever get seized. So taxpayers should not ever have a collections case with the IRS where there's enforcement action. The
Mhm.
reason being there are so many opportunities to simply resolve the issue. And again, doesn't mean full payment, but resolve the case and
Mhm.
close it out before things escalate to enforcement action. So,
Mhm.
the IRS is not going to levy someone's bank account and collect $400,000 in back taxes. Most
Mhm.
people don't keep 400,000 in the bank account. They issue a levy only to get the taxpayer's attention. And needs to get the taxpayer's attention because they fail to respond to 6, 7 letters in the mail. Field visits by a revenue officer, such as myself when I was there, and things like that. So one of the biggest misperceptions of the IRS is that they have to be so scary and that they're coming after you and watching you and chasing you. The reality is the IRS today is the IRS computer. So if you file a return and your tax return says you report to the IRS that you owe $40,000 just because there was a real estate transaction or there was something going on and there's a balance due, not a problem. You reported to the IRS you owe 40,000, no problem. Now you just need to resolve it. So I'm going to set up a payment plan. I'm going to claim I have a hardship and demonstrate that or some other resolution.
Mhm. Wow. Yeah, that's really interesting. So the next thing that comes to mind, as I mentioned, hearing how it works over here in Canada, it's I believe I heard that in Canada you can go bankrupt on your taxes, but I think I heard that you can't do that in the U.S. But and I don't know if that would be within your purview of expertise or where exactly you wouldn't be able to comment. But do you have any information on that?
Yeah, most of the back taxes, the federal taxes are non-dischargeable
Mhm.
in bankruptcy. But the interesting part about that is that um, we get this question a lot. So we get folks who call us. We have CPAs and bookkeepers and accountants and real estate folks, a whole bunch of folks who refer their clients to us. And the number one thing they say, do I need to file a bankruptcy? And I always ask them, what other debts do you have? And many times they have other debts, but sometimes they don't. And trying to file a bankruptcy for IRS taxes is not the right even thought or plan of action, only because not only because it's not dischargeable, but also because if you're in a financial hardship, the IRS will close your case as a financial hardship. Believe it or not. So we have had clients over the years that owe millions and millions of dollars to the IRS. Maybe they were high income before, they had certain assets, other stuff, but that was in the past. As of now, if they're in a financial hardship, and the IRS has a financial form and things you use to demonstrate it. It's actually very straightforward. It's always just based on procedures, not their perception, but procedures. And you demonstrate a hardship, they'll close your case out, even if you owe millions of dollars to the big, bad, scary IRS. So you don't really need to even think about claiming bankruptcy if you just have a tax issue. If you have other debts, then maybe it makes sense to consider bankruptcy. But with the IRS, there's so many options to actually set up a favorable resolution that works for you and that satisfies the IRS. Because the reality is, Dan, that the IRS has 20 million IRS collections cases, and they don't have 20 million employees to handle these cases. They don't care if you owe $10,000 or $1 million. It's equally the same collections case for them. They just need to solve the collections case and move on to the next one in their inventory.
That makes perfect sense. And then, like, this is one of my favorite things, is to find out where, you know, humanity as a whole has made a decision that it much more in line with where people would prefer it to be. And it's so fascinating. But so as far as these collections go, I know on TV sometimes, like, some of the more flashy, like debt collector, you know, repossession, that sort of thing. It's like, you know, hopping into a plane and flying it off before the owner has a chance to stop you. So is that something that was part of your purview, or was it just really, like, I don't know if you're a pilot, and I doubt you're that specific one, but like, were you doing like cool stuff like repossession, or was it just more phone calls and paperwork, or how's that work?
So in 8 years that I was there, even though I had certain higher level cases, once I moved into a certain grade 12 position, they just call this a senior position. But even after 8 years in those senior positions with higher dollar cases and more complex cases, I didn't do even one seizure of assets.
Okay.
And that's where you go in and, you know, you come in with the seizure document. It's a very formal process, and you go into the restaurant, and you go into the business taxpayer or the individual and saying, I'm seizing the residence, or I'm seizing the restaurant or the business. And I think the reason for that is because there are lots of opportunities, like I mentioned, to actually avoid that. It's a very rare occurrence that's even appropriate for the IRS to do. In other words, they don't even want to do it. It's inappropriate in terms of it's just a wrong resolution for almost every single collections case. It's not an actual resolution. It's something else, you know, that they don't want to even do. So I never did that. There were colleagues who did some seizures. I mean, before 1998. When Congress passed this Reform Act here, there were IRS agents who did a whole bunch of seizures because it was just the Wild West back then. So back before 1998, the IRS agents would send like appointment letters to the taxpayers. Taxpayer would, you know, park in the garage down below, come upstairs, and they would, you know, put them in the meeting room. And while they're in the meeting room, the IRS agent will head downstairs to the parking garage and seize the vehicle, you know, and all this other crazy stuff that they would do. So that was before 1998, before Congress passed this Restructuring and Reform Act. Now the IRS has to walk on eggshells. Okay, and there are a whole bunch of checks and balances and check boxes that these IRS employees have to really consider whenever they're taking any action. There's appeals. You can appeal everything before, during, and after. You disagree with the balance, appeal. They rejected your penalty removal request, appeal. I mean, there's tons of appeal opportunities. In fact, you could actually, I always tell our clients that we're always on offense. And what does that mean? That just means that we're not scared or worried about getting a letter in the mail. We actually want to open it up. We want to know what this letter is saying, because it's just a canned template that it's saying. It puts in the name Michael or name Dan and puts in our address and the dollar amount if we have a dollar amount. It's a canned template coming from the computer. And we want to know exactly what's happening very precisely on the collections issues so that we can resolve it. And now we know their procedures, so we could say, here, I know you need this. Here it is. I know you need this. Here's a beautiful, easy to read package of why you should remove the penalties and the interest. So you could always remain on offense when you have an IRS issue.
That's interesting. And so and just so that we have it mentioned again, so irsvideos.com, you have content that's similar to that, or do you want to say a thing or two about what's on there before we get to our next line of questions?
Yeah, so what happened with irsvideos.com is for years and years, and it's been close to 20 years that I've been helping taxpayers with back taxes. A vast majority of taxpayers should never ever be hiring a so-called tax relief firm to help with their back taxes, including mine.
Hmm.
And we tell them this when we chat with them. We get referrals all the time, and we say, you don't need to be hiring us to fully represent you and take over your case. Since the IRS works on procedures, you could do the exact same thing we can.
Hmm.
And it just doesn't make sense for your scenario and the cost to bring us on board. Just do exactly X, Y, Z. So I've been telling people this one-on-one for years, and my team and everything, we've been telling people for years. So I finally got around to putting all those procedures and instructions in just a step-by-step blueprint in video form.
Mhm.
And that's what irsvideos.com is, because 9 out of 10 people don't need to hire anyone. The other problem is, I'll tell you quickly, Dan, is that a lot of these people who owe back taxes are victimized and preyed upon by these so-called tax relief firms. These are here in the States where they talk about, we're going to resolve your balance for pennies on the dollar. We're the only one with these secret ways to bring your balance down. We have a direct connection with the IRS. All of this other grandiose promises that they make, and they basically become victims. And I've seen this year after year after year all the time. Even when I was at the IRS, I was across the table and across the phone lines from these unscrupulous tax professionals and tax relief firms.
Mhm.
So it was very, very difficult to be, watching these taxpayers be taken advantage of. So that's why we created irsvideos.com. And again, 9 out of 10 people, they could always contact me if someone has a question, but a vast majority of people do not need to hire a service firm. They just need irsvideos.com, and that'll solve their issue.
That's fantastic. Especially so, like one of the biggest things that jumped out to me is, there's a reason why attorneys encourage you to never speak to the police, and of course, there's a difference between talking to a police officer and talking to an IRS agent. But like pleading the fifth, that is so that you don't incriminate yourself, and the Miranda Act saying that anything you say can and will be used against you. I've seen some attorneys interpret that as if you say 99 things that basically show your innocence, and then one that, like may imply that there's a possibility that, you're confessing guilt, that's the one that shows up in court with these great big letters on a sign. It's like, you didn't like him, that sort of thing was the example. So as far as self-representation goes, and that seeming like a bad idea, what sort of retort do you have for that?
Yeah, that's a really good question. So the number one thing that we talk about all the time with our clients and taxpayers who get in touch is that the IRS has a criminal investigation division, but that's completely separate from 99.999% of taxpayers who simply get IRS letters in the mail.
Mhm.
So these are just taxpayers who have a back tax, and they owe money they can't full pay because they don't have the cash right now. No problem. They just need to set up a payment plan or a hardship or try to get penalties removed or what have you. So the IRS, for the most part, is administrative agency. So when you're trying to resolve your IRS back tax issue, and if you get a letter in the mail, or even if you get a field call, someone knocks on your door, which they just stopped a couple of weeks ago, Dan, the IRS changed their procedure. Believe it or not, after years and years, they don't want them going out into the field making unannounced field calls, knocking on doors.
Probably dangerous.
So if you get a letter in the mail, yeah, which is a good procedure, it's a good change. So if you get a letter in the mail, it's number one, don't panic. It's just they don't even know who you are, and they cannot care less. They just need to close that particular collections case in their inventory of 20 million cases. And then the second thing is you just need to know what the procedures are to set up a payment plan.
Mhm.
Most taxpayers, the questions in their head are, how do I set up a payment plan? I
Mhm.
can't afford to pay $40,000 all at once, but I could pay $500 a month or $100 a month. No problem. You just set up a payment plan based on the procedures. And the taxpayers can do it exactly like I can do it, the exact same way, because whether Michael calls or Dan calls or anyone else calls, it's the same exact procedure.
Yeah. Yeah.
And it's just an administrative procedure. It's not a legal procedure. So if anyone hears anything on the radio or advertisement saying, oh, you got to contact an attorney right away, attorneys are absolutely unnecessary if you owe back taxes to the IRS. Reason being is because they're not suing you and you're not suing them. It has nothing to do with a legal matter. So you just need to know, how do I set up a payment plan? How do I request for penalties to be removed and anything else you're trying to achieve with the back tax?
Excellent. So I'm involved in commercial real estate and syndication. You get all kinds of wild stuff from that, and it's really interesting hearing that, like in commercial real estate, the thing that jumped out to me is debt service ratio. And so it seems to me like the IRS would probably have some sort of back of the envelope way of expressing the payment plans that are acceptable. I'd imagine it'd be like, this is the total, income after taxes that this person has. And so your payment plan shouldn't be above like 10% of what you make or something like that. So is there some sort of like guideline for that as far as like or maybe like there's a tiered system where it's like if you're making $500,000 a year, then that percentage goes up, whereas if you're $50,000 a year or something like that, then they can't go above like a certain level. Like what kind of trouble could somebody be in?
Yeah, the IRS has certain procedures if you're talking about back tax, or if you're talking about the tax return. So in both cases, I'll speak to both. So we have a lot of clients who are in real estate as well, and those tax returns especially need to be prepared professionally.
Right.
So that means all the depreciation that you're entitled to, if there's certain 1031 exchanges, if there's certain sales, the cost basis needs to make sure that it's accurate. So it needs to be prepared professionally so that the numbers on the tax return itself are accurate. So very important. And folks always want to know whether or not they're going to be, have a higher probability or chance of an audit. That's where, for the most part, the IRS computer comes in. So somebody at some point, probably multiple programmers, program the IRS computer to notice maybe changes in patterns of last 3 or 4 or 5 tax returns. And if there's massive change in the income level, or there's their Schedule C here, which is their small business or depreciation or things like that, then the computer may flag it. So those things are automated by the computer. And then when it comes to back taxes, if someone owes, $10 million to the IRS, is the IRS going to say you have to pay a lot more? We have a client now who just came to us. He's currently on a $26,000 a month payment plan. That payment plan for him in his current financial scenario, is too high. Even when it was set up by somebody else a while back, it was still too high, but the client was able to make those payments. But now it's just way too high. So how does the IRS determine what payment plan amount somebody should have if they owe $10 million to the IRS? Well, the way they do it is actually pretty straightforward and, for the most part, fair and objective. They have this standard financial form, which says, what is your income per month? What are your expenses per month? Do you own a house? If you own a house or any real estate, like multifamily or whatever it might be, storage, is there any equity in there? And by looking at the financial form and doing a simple review and financial analysis, you can determine with the IRS together, what is the taxpayer's ability to pay at this time? So $10 million is really irrelevant. That's just about the back tax amount. What they're trying to figure out is, what is the taxpayer's ability to pay right now, based on the financial, not what they would like them to pay or what the taxpayer would like to pay per month. So you take a look at it. Many times we have clients who have millions of dollars owed, and we have $100 a month or a $200 a month payment plan, only because that's what the numbers, the math, show right now at this point. And there are no assets from which to collect right now or anything like that. So it's a very for the most part, objective review of what the resolution should be on any collections case, irrespective of the dollar amount.
Okay, so then that goes into the next question of, you know, like me personally, like when I was in Taiwan, I liked my single malt scotch, my blended scotch, and all that kind of stuff. So the IRS isn't in the business of saying like, hey, you know, you're drinking 15-year-old scotch, maybe you should switch to 8-year-old scotch so that you can increase your contributions. Like are there any lifestyle advisements that the IRS does when you owe a ton in back taxes then?
When I was doing the IRS has a very rigorous interview process for revenue officers, for the collectors,
Yeah.
and I of course went through that. And part of it was a role playing on the telephone. So I was actually at the Los Angeles federal building. Had to fly from Florida to Los Angeles to do that, and it was like 7:30 a.m. We did fingerprints, and right after that, they put us all in a cubicle, and they gave you three cases, just these fictional cases on paperwork, and then you're supposed to receive the call from the taxpayer, and you have certain objectives. One of the objectives for one of the cases I remember is you had to talk to the taxpayer and tell them why we couldn't allow their private school tuition. And you can't say that you got to go to public school instead, but you say that based on the IRS rules, just on these particular expenses, the IRS is not allowed to allow that particular private school tuition because it exceeds the standard amount for expenses for your dependent.
Mhm.
So the IRS has certain lifestyle kind of standards, but it really is, they call it actually the national standards list that they update every year. And it says for a household of one all the way through a household of five, what do they allow for housing? You know, based on the geographical location. So someone living in Los Angeles is going to pay a lot more than someone living, in the Midwest. So they have that. They have food. They have miscellaneous. They have vehicle ownership, vehicle operating, and they have those standards there. So they won't really talk about those specific things, but when you look at all these financial statements from all these taxpayers over the years, you see a lot of stuff. You see a lot of expenses. You see a lot of just, kind of crazy, wild stuff. I remember when I was at the IRS, there was this one taxpayer I had assigned to me. And when we look at the bank statements, I had to summons the bank statements. So the taxpayer wouldn't give it to us. And we're trying to figure out what is the deposits, what is your actual income per month and what are your expenses per month, so you can figure out a payment plan. But she wasn't cooperative, so we had to issue a summons to the bank. So we got the last 3 months or 6 months of bank statements, and I'm going through all the transactions, and every day, literally every day, there's at least 10 to 20 transactions that have to do with shopping. So this individual would purchase something from Nordstrom or one of these department stores, and then also return it. And then would also purchase something else from 3 or 4 different places, and then there would be some returns. So this was, and this would go on for months and months, every day, literally every single day. And it was so complicated, you can't even tell what was kept or what was not kept, but these are mostly clothing. And this person was like a shopping addict or some kind of literally an addict of some sort. And so, that person never ended up responding. We ended up working, the case and closing it out eventually. But lifestyle changes. I mean, the IRS has certain level of national standards for housing. And then there's certain rules where you could basically have 100% of your expenses accepted for a whole year. And then after that, it'll adjust down to the national standards and things of that nature. And there's also other stuff you could do to kind of address that and make it more favorable as a taxpayer. If you owe millions of dollars to the IRS, a certain amount, the IRS is trying to figure out along with you objectively what's your ability to pay the total amount at some point.
I love that. I love that. So let's lighten things up a little bit with a joke. One of my favorite lines in film history is, of course, Chris Tucker's line from the movie Rush Hour when he mentioned about how being part of the LAPD, his own mother lies and tells people that he's a drug dealer, which I think is absolutely hilarious. So, and it's a great segue into the social stigma of being involved in the IRS. So can you say a thing or two about that? Like I imagine you didn't lie to people, and neither did your mom, about being a drug dealer.
Yeah, I didn't do that, but it was always interesting, to start conversation and discussions, networking events about, what you did for work when I was at the IRS, and then even after, I was a former IRS agent. And then I would emphasize that I said former, so they don't have to be scared. But it's funny, it's almost kind of like that whole thing with doctors when, when you meet a doctor, and a lot of doctors, I always say, people start asking them questions about their health and things like that at dinner parties. So same thing, being a ex-IRS agent, they want to know, what is it like being at the IRS, and what did you do, and all that stuff. And a lot of that stems just from, this kind of reputation of the IRS. It's perpetuated by many different means, media, and also just from the so-called tax relief firms that I mentioned earlier that just do a lot of fear mongering as part of the marketing.
Yeah, that makes sense. And so my next question then has to do with the real fear that I think people would have if they find out that they're interacting with an IRS agent, which is what's going to increase the likelihood that you'll be flagged for an audit. Like I imagine, anybody could report anybody else if they're just like, hey, this person appears to be broke, but suddenly seems to be able to afford a Ferrari, like something like that. There might be things like that, but what are some things, I guess, just from the outset that might increase the likelihood? Because from a computer's perspective, it sounds like that decision isn't really up to the agents at all. It's just the computer just a bing, okay, check out this person, something seems to be up. What can you
Yeah.
tell us?
Yeah, there aren't that many IRS auditors there, and the auditors are not charged with sitting in their desk going through tax returns to see if anything looks interesting. They're so few and far between, these IRS auditors, and they're given cases by their colleagues in collection. So, so if there's something unusual about the tax return, this collector just collected, and they'll go ahead and refer that to the auditor to do an audit, see if it's correct. I was looking at some tax returns last week for a client of ours, and I asked the client, who prepared this? Did you prepare it, or was it prepared by somebody? And the reason I was asking is because when I'm looking at the tax return, almost all the numbers end in like zeros. So like the income was, 110,000 even. The deduction was, 13,000, 500 even. And every single figure was zero. So that itself is very unlikely, that those numbers with all the numbers, and it wasn't just one for one tax year. Look at all the other ones. We look at 7 together, all 7 years, subsequent years, all in zero. And these tax returns, just staring at them, are just not accurate. There's no way they could be accurate. So things like that, the IRS, no one really knows exactly what the IRS programming has in terms of flagging. But there are things you can do as a taxpayer. Number one is just to make sure that your numbers are accurate. We're the ones who are reporting it to the IRS. So we're the ones who are preparing our own tax return. So we say, this is my deductions. We're only going to claim a deduction if we actually have that deduction. If our income was X amount of dollars, then that should be the correct amount of income. We're actually giving it to them. So the only thing they have is what we gave them. They might have some 1099s or W-2s or other income that we didn't report, but we should have captured on the tax return. Even if that happens, it's not a big deal. All they do is say, hey, it looks like you missed a 1099. Here's the tax amount related to the missing amount. And then if it's correct, then you just go ahead and move forward. So you just want to make sure the tax return is prepared correctly. Now that could be with software that you do yourself, or you could have a tax preparer do it. It really doesn't matter if you have a simple issue or simple tax return rather in financial scenario, then vast majority of taxpayers, I mean, over 80% should just self-prepare the tax return using software. That's all they need. They have a simple wage job and that's it. And then just go ahead and send it to the IRS on time. And then the second thing you do, so you don't owe any back taxes, is make sure you have adequate withholding. If you're an entrepreneur, make sure you have your self-employment taxes paid. your estimated taxes quarter by quarter. And then you just want to make sure the tax return itself is accurate. At worst, then when someone gets an audit, it should just be a waste of time. If they audit any of our tax returns, all we should be doing is just wasting our time because our tax return is accurate. I would only hand over a tax return that's accurate to the IRS. And one interesting I'll mention, one interesting that they're changing, which I'll mention, is the IRS just announced for years they've had the ability, Dan, to flip a switch and basically pre-populate a tax return for every taxpayer and send it to the taxpayer. But the way politics works here is many years ago, a very big entity said, paid millions of dollars to Congress, literally, and said, don't flip that switch because we want our software to be the main thing that taxpayers use. Yeah. So now the IRS just announced, we're going to flip that switch. That's what the IRS has said. And we're going to pre-populate these tax returns that people can use as is. They could modify and then use it, or they could just disregard it altogether and use their own tax return. And this is going to be fantastic because, number one, the house of cards of this whole tax preparation kind of scheme that's causing a financial hardship for a lot of taxpayers will finally crumble, which is fantastic. Only businesses that should be in business are legitimate businesses that actually help people. And then the second thing is the vast majority of people, they just, they can't afford a tax prepared $600 for an actual CPA or enrolled agent or anyone else who's licensed. And in fact, they may not need it. Now, different story if you're in real estate and there's depreciation and there's all these transactions and all this other stuff, you definitely want a tax professional to help you and plan for that. So those things are, again, one of the reasons why this IRS agency, really is a sheep in wolf's clothing, in that the reputation is so far out of left field, is that you just need to make sure you're reporting your tax return accurately, which is pretty simple to do. And if there is a back tax, don't panic. Just go ahead and understand the procedures and set up a payment plan or a hardship. And you may even be able to reduce the liability amount by getting rid of the penalties and interest just based on their procedures. There's no magic involved when it comes to the IRS.
I love that. And up here in Canada, yes, the exact same thing happened. It was probably the same software that said, no, don't do people's taxes for them, even though you guys, have access to all the rules and all the amounts and all that sort of thing. So I think it's definitely a step in the right direction, because just that unknown part, especially if there's some entity that got a hold of your social security number and falsified income for their own benefit, you'd know before you go. It's like, oh well, before here, this is accurate, and then you find out what I'm getting something back that's completely different. That's got to be scary. But one thing that I also heard, and this is just basically like rumor mill through the grapevine, whatever, is one thing you want to avoid is making amendments to your returns, because the way that was explained to me here in Canada by the person who says, oh, careful about amendments because you're going to get audited. They were saying that it was because if the country has to pay you back money, they don't want to do that. So it makes sense to get somebody to spend a few hours looking over your case just to make sure that there's no fun and games. Are you aware of anything as far as filing for amendments on your taxes, causing those kinds of effects?
That's really interesting. I never heard that particular rumor before. Now here in the States, the IRS has, people at the service center that will review the amended returns. And in fact, the IRS encourages taxpayers to file amended returns, because now if you made an error, you're actually self-correcting your error. And it's not a big deal to make a mathematical error. Or if you miss some income, and a lot of folks don't even get their K1s, their Schedule K1s here, right, from their partnerships and the businesses until months and months after the original IRS deadline. And it's very common, very normal, and very routine to file amended returns here. And the IRS just set up an easier way to do that. You can now file them electronically.
Hmm.
So getting them to actually process those amended returns should hopefully be quicker now.
That makes.
And they love that. And they actually don't have enough people there. There are enough resources. They want the taxpayer to participate. And if the taxpayer is self-correcting some error, then that's fantastic. They're actually assisting, and you're on offense, and you're correcting your own issue before it escalates into some problem.
Beautiful, beautiful. So then the next question would have to do with discretion. Like it sounds like there's very little discretion for agents in general. It's already, like pretty much systematized. And one that a friend of mine was asking specifically for is the tax extensions. So like when it comes to getting an extension on your taxes, let's say it's because of K1s, coming late, things like that. Is it, like it's okay for this person to get an extension, that person is not okay for this, that, or the other reason? Like how does that work as far as when it's okay and when it's not?
Well, yeah, with the IRS, 100% of taxpayers can get an extension to file if they need it or if they want to. So, so April 15th is usually the deadline. You can get an automatic 6-month extension
Mhm.
just by requesting it. And the IRS, it's not whether they grant it, don't grant, it's just you get it. So as long as you submitted a timely request for an extension to file, you'll have till October 15th to actually file the tax return. Now, the one nuance there is that this extension, the 6-month extension, is only an extension of time to file,
Mhm.
not an extension of time to pay.
Right.
So any tax due is still due by April 15th. So that's a mistake that we see all the time. So taxpayers need to make sure they pay on time and estimate what they think they're going to actually owe and make that payment by April.
That makes sense. That makes sense. So then another question: when you open up a company, you always have to decide on the fiscal year. And I know that you're pointing out the facts, which is you should be filing accurate tax returns, so it shouldn't really matter when you end up doing it. But do you think that there's any advantage to picking something other than December 31st as the end of your fiscal year, or is it just basically all the same?
Yeah, I love December 31st. Just for me, mentally, it's easier to have a 12-month from January to December. But in terms of every business has their own needs. So with the IRS, really doesn't make a difference. The only thing the agency needs, which creates some issues sometimes, is just the certain paperwork for certain designations. So if you're actually designating a fiscal year, and you have if you're trying to go from a corporation to an S corporation, for example, the IRS just needs all the proper forms and paperwork, and they need it by a certain time, and you need to make sure you meet those deadlines. So there's a lot of that paperwork, which a lot of these entrepreneurs and technicians don't actually stay on top of. And that's what creates issues for the businesses, for the EINs here in the States. So a lot of the businesses kind of fall behind on doing those things. And they don't get their fiscal year approved only because they didn't submit it timely. Or they're not making their payroll tax deposits on time, or they're not doing whatever is required of the business to send or report to the IRS agency. So it's very, and there's always a lot, of course, right, with all the regulations. So it's just important to keep those things organized to make sure that we're getting the IRS what they need. They're not missing anything, and that's how we stay off the radar.
Mhm.
I'd rather be proactive and stay on offense, like I mentioned, that than have anything escalate to an issue.
Awesome, awesome. So in this FIGGERRIDOUT.com series, I call it the Dream Job series. I tend to interview people where somebody could be sitting there saying, you know what, I always wanted to be, for example, an opera performer on Broadway, something like that. So I interviewed somebody like that. And the recurring questions I always ask all of these different dream job holders is how can somebody get there with no friends, no family, and no cash? And the main emphasis is usually on personality traits. and actual actions, because there are some jobs, like if you want to be in the NFL, where you certain personality traits, they have to be there already or they have to be developed, and other ones you have to get rid of completely. But before we get to that question, the IRS is federal, and there's also a state level tax. If somebody is thinking of getting involved in a tax collection service, as far as like IRS or state level, why would somebody choose federal versus state? Do you have any input on that?
Yeah, that's actually a good question. The IRS at the federal level has offices in probably every single state, and there's different positions within those states. Now they may or may not be hiring, in the state of which somebody's living at the moment. And then of course the state has each state has multiple agencies, including their own collection agencies. Here I'm in the state of Florida right now. In Florida, there's no state income tax, but there are agencies here that collect other types of tax, right? So I would just look at that and see who's hiring, what the location is, if they need to relocate within the state itself, and then also what the compensation is, what the benefits are. When I was at the IRS, I tried to utilize every single benefit I had. So my objective was never to stay at the IRS. My objective, I always wanted to work for myself. And after 9/11 happened, I found myself going to from job fair to job fair, and that's when I ran into these IRS agents that had a booth. And I was very diligent, going to booth to booth to booth, and then I chatted with those folks and did the 150 questionnaire, and then scored whatever, and was able to move to the next level and all that stuff. So my objective was to work for myself, and I ended up getting my master's degree on the IRS's dime when I was there. Used all the benefits, health benefits for me and my wife at that, and the kids that came later and all that stuff. So, those are things that should be considered. And then I considered it on the job training.
Mhm.
I created a lot of documents I needed for my cases. And before I left, I sanitized all those documents, took it with me. So no confidential information was taken out, and was able to use that in my practice. So you just got to understand what you want to do in the long term, what you want to do in the short term, and how to maneuver based on what's going to be more favorable.
Right, right. And before this interview, I mentioned my libertarian streak, which is why I was kind of curious about that decision of like, do you go with state level? Do you go with federal level? Like, is there some sort of like implicit thing, like in your own personality, like where you have perhaps more faith in the federal government than you do in like Florida state government? And like, I'm not talking anything in particular. I'm not looking for some soapbox thing, but like that, like, is there anything else to add on that choice? Like, do you have some sort of personal leaning that led you in that direction, or it was just more that the benefits sound fantastic, like being able to get a master's degree, that's huge.
Yeah, in terms of having faith, I would say and encourage folks to have faith in themselves.
Mhm.
That's the number one entity that you could always rely on, and should rely on. And again, a lot of people are struggling right now as we speak, and they need a job, any job, in order to pay the bills. So that's very important. And there's no job that that people should stay away from if it pays the bills, and they need to do that short term. That's fantastic. And then in the long term, figure out, how am I going to get out of the hole that I'm in? What do I want for me? What do I want for my kids, for family? Because things are changing. Rent here in the United States is going up. People can't get a mortgage. There are a lot of challenges, and from my perspective, these challenges are just beginning.
Mhm.
And one way in order to secure yourself is to ensure you have a certain level of financial moat around you.
Mhm.
And that's why the short-term planning is good, and then the long-term planning is even better, and figure out where to maneuver to in order to accomplish, whatever it is that your objective is. So I would go with that. There's I personally, I would take any job, and I did. And I did before the IRS, and when I was in high school, and everywhere else. So it's very, very important in order to get the finances in control, And that way you could be in control of your own life and have independence.
I love it. I love it. So then, to wrap things up, the question: if you have no friends, no family, no cash to really help you out, how does somebody get to be in an IRS agent's position? Like I'm like you mentioned going for the master's degree, so you probably already had your bachelor's. So like a college degree is probably like the minimum. You'll have to figure that out either through scholarships or like saving up money from some job to pay for that college. But what are your takes? No friends, no family, no cash. How do you get to where you were?
Yeah, the IRS collection position, I think it did require at least a bachelor's.
Mhm.
There were also, CPAs and other folks who had their own practices that actually moved into, to the IRS position there, which is interesting. But for folks, the IRS has about 70,000 or so employees, various different positions all throughout the country, and I even have a few offices overseas, and folks would be very, I think, surprised that to be able to get in an entry level if that's something that was interesting to them. Whether they want to be an economist, whether they want to be at a service center level or just helping taxpayers who are elderly that need assistance. The IRS has those positions as well, which is great. So the IRS, the agency itself is, I think, probably one of the easier agencies to get into if there's no friends, no family, or any other connections. You just head to the IRS website and they have all the open positions there.
And then as far as personality traits, where, like if you have this personality trait, then you should probably look elsewhere. Like anything come to mind or any that really need to be developed?
Yeah, I would say probably just the universal traits, which is, professionalism, no matter where you work.
Mhm.
That's true for anywhere. If you want to keep your job and you want to do a good job at where you're working. Professionalism, if you're working in IRS collections, for example, you need a tremendous amount of patience, understanding. When I was there, it was an educational role. I was educating the taxpayer that I was talking to because they didn't know how they got into the mess that they got into, you know. So we talk about how do you prevent getting into the situation before, again, right? So they talk about withholding and estimated payments and all that stuff. So you got to have a tremendous amount of patience. You have an understanding. You also got to be an expert in whatever you're doing.
Mhm.
Be really great at what you're doing. When I was there and I started out there, I ended up within a short period of time training the senior level collection officers.
Mhm.
And I was asked by the manager to train them because they were falling behind on what they're doing. And there's constant changes. It was a very interesting role because there's constant changes. Every single week, there's new systems to use, new this, new rules, new procedures, new eggshells you have to walk on, all sorts of different things. So you have to be adaptable. And you have to learn quickly and know how to, manage your time. I was working outside of my 9 to 5 tour of duty that they told us to clock in at. If I didn't, I wouldn't be able to stay on top of my cases.
Mhm.
So I think those are universal traits. And for anyone who is interested in getting into entrepreneurial type role, those traits are going to work as well. And as an entrepreneur, any type of side business you have.
I love it. I love it. And as far as how to reach out, me personally, I got this nice distinct last name. It makes me really easy to find on LinkedIn, which is how I met Michael. But if you are involved in commercial real estate deals, the interesting thing that I offer, you can scan this QR code right here, and that brings you to the FAQs page of 506B Me. And what that is, see, the SEC requires that if you're going to be involved in private, off market, also called 506B deals, then you have to have a documented prior substantive relations. In other words, you have to be able to show the SEC proof that you knew the people that you are planning to do business with for the 506B. So you can reach out that way. But Michael, I know you're active on LinkedIn. You got irsvideos.com. What are the best ways to reach out if it sounds like you're a good fit for what they need?
Yeah, yeah. If anyone has any IRS back taxes, you can head to irsvideos.com. I have all the instructions on how to resolve your issue there. And of course, you could contact me directly at michael@irsvideos.com. So michael@irsvideos.com.
Excellent. And you mentioned that there's a bunch of free resources there. Realistically, like if somebody's in financial trouble, like the minimum barrier to entry, like are we talking hundreds of dollars? Are we talking thousands of dollars? Are you able to give a order of magnitude of, if you actually need to get, like your services and hire you on? Are you able to say anything about that?
Yeah, so at the site irsvideos.com, it goes all the way up. It goes from free all the way up to a whopping $94. And then which again, 95% or 99% of people only need that. If someone needs to bring us on board, we'll start at the very bottom with a 1 hour strategy session, which is just $395 right now. And then when we do that, we actually attempt to replace ourselves. By going on the strategy session is not a consultation. It's actually giving them step-by-step blueprint on their specific scenario. So the vast majority of people do not need to ever hire a tax firm, including our tax firm.
Right. Excellent. Excellent. So then the last thing I have, it's actually not for you, Michael, it's for you in the audience, is my public service announcement that I like to point out. If you've been watching this interview and you've been experiencing searing pains in your eyeballs and like migraine-like symptoms, I'm confident it is because of the hideous subscribe button, which is just down there, and you can click it and it doesn't cost you anything. There's no taxes that you have to pay as a part of it. And of course, I'm biased. I want people to click on it because if enough people do, then YouTube will start to pay for these videos instead of me. And I think that would be amazing. But the only result for you is my videos may show up on your list of suggestions, but you can feel free to ignore those suggestions. I just appreciate the fact that you spent this time with me. Just like Michael, I appreciate you joining me today. This has been really educational and fantastic.
I had a great time, Dan. Thanks for having me.
Awesome. Thanks.